Well, good evening, everyone. My name is Brian Petrus. I'm here with a colleague, Mr. Keith Bittel. Quick background on me. I'm an assistant professor in the School of Business at Westminster College, based out of New Wilmington, Pennsylvania. I've been teaching here since about fall of 2013. I teach a variety of different courses in the business area. So intro to business, human resources, project management, capstone courses. But I guess the most relevant course as it relates to this particular subject matter here today is some of the personal finance information that we built out in the past 2 years here. So Mr. Bittel, if you'd like to introduce yourself.
Certainly. As Brian said, I'm Keith Bittel. I am a CPA teaching in the School of Business with Professor Petrus at Westminster College. I'm also a practicing CPA. I have a tax accounting consulting practice centered in Pittsburgh, and I specialize in small business startups, tax compliance, planning, things of that nature. I teach accounting, economics, and a variety of service learning course here at the college as well.
So our talk this evening is about how to develop a cryptocurrency strategy. This talk was actually initiated by some of the Westminster students here that were really curious about cryptocurrency, who should trade it, who shouldn't trade it, where do you trade it, how do you trade it, what are the implications of trading it. So we were asked to discuss some strategies associated with this. Before we dive into some of the information associated with this, we felt it appropriate to kind of put together a little bit of a disclaimer and really highlight a couple key points here. Now, first and foremost, neither myself nor Keith are acting in the capacity of financial advisors. It's extremely important to note that investing in general, but specifically for cryptocurrencies and ICOs or initial coin offerings, is highly risky and certainly highly speculative. So everything that we're going to discuss here tonight, it's simply that for presentation purposes. And please don't construe this as anything materially significant as it relates to legal, tax, investment, financial, or other such advice. And full disclosure, I am personally invested at the time of this presentation in a variety of cryptocurrencies that does include Bitcoin and Ethereum. But again, just note that anything we're discussing tonight isn't necessarily advice or recommendations and doesn't represent any views on behalf of our employers, Westminster College, or any other third-party service provider. So while we may talk about some personal stuff as it relates to which coins would I personally jump into or which exchanges would I personally utilize, that's not necessarily a recommendation for any particular financial instruments or particular exchanges. So right off the bat, we have a little bit of an agenda set up here this evening where we will first want to just talk some basic personal investing philosophy. We're going to get into some investment goals, risk tolerance, time horizon discussions, ultimately lending itself to portfolio allocation as well as trade frequency associated with trading cryptocurrencies and or crypto tokens. From there, we'll talk about the different types of platforms and or exchanges, and ultimately the user choices in selecting the appropriate platform or exchange that is most appropriate based on their trade and investment philosophies. And then Keith is going to chime in, talk about some serious considerations whenever an individual is discussing trading crypto, specifically speculation, meme coins, some of the government oversight, as well as implications. And we'll open up at the end for some Q&A, depending on if there's enough people on the call to throw out some questions and everything to us here. But to dive right in, we first thought it was important to discuss, the investment goals and investment philosophy here. And what we mean by this is really understanding your why behind the investing initiative. Generally speaking, and I have experience as an investment advisor back at a firm that I used to work at. Generally speaking, anytime we would meet with an individual to discuss any sort of investments, we always ask right off the bat, why are you investing? What do you hope to do? What are your investment goals? And I think that's one of the most important things to discuss, not only with respect to general investing, but even more so when an individual is thinking about investing in cryptocurrencies or any type of speculative investment. Knowing that why, is this going to be something that you're saving for general savings? Is this going to be for a future home, a car purchase? Is this retirement, or is this general wealth building? And the reason that we want to bring that up is that philosophy ultimately lends itself to the type of investment strategy that an individual should ultimately select and choose to invest in. But right off the bat, I truly believe in this philosophy. This is stressed by a variety of investment advisors. I really don't recommend ever investing in anything that you do not personally understand. So oftentimes I have students ask me, hey, Mr. Petrus, what would you invest in? Should I put my money in Bitcoin? Should I put my money in Ethereum? And before I even say, I'm not an investment advisor, I like to ask them, why are you thinking about getting into Bitcoin? Or what is a blockchain? What's the difference between Bitcoin and Ethereum? And if the individual is like, I really don't know enough about it, but I know a lot of people are making a lot of money in these things, like that's the number one reason that I would tell you not to invest in it. If you don't understand the specific asset class or the investment that you're thinking about putting some of your hard-earned money or your hard-earned cash into, right off the bat, you should really pause and realign your thought process as it relates to why am I putting this money and how much am I willing to invest? And that leads into the second area, which is SMART goals. Write them down, write them down, write them down. Anytime an individual asks me, what kind of things should I put my money into? How am I going to build wealth for the future? I always draw back on these SMART goals. Write them down. And the reason that we say write them down is you're significantly more likely to follow through and be able to attack that strategy if you wrote it down, you keep reflecting back on it. And SMART goals are specific, they're measurable, they're achievable, they're relevant, and they're time bound. So if somebody says, my goal is to have $100,000 in this account within 10 years by investing this amount per month, that's something that is very specific. It's measurable to see if that person's on track with respect to that particular goal. It's achievable as long as they're able to dedicate X amount of money towards that particular goal. It's relevant with respect to whatever the end goal is for that wealth building philosophy, but it also has that time bound side of it. So if somebody says 100,000 exactly in 10 years by X amount invested, achieving X amount of interest rate overall or rate of return, that's a very specific SMART goal. And once you have those goals lined out, it's only after you have identified those specific goals, it's car goal, home goal, retirement goal, then you can develop that plan and ultimately choose and select the specific asset classes or investments that allow you to achieve the goal. And then it's just a repetitive process. But anytime somebody or a student asks, should I invest in Bitcoin? I don't like to answer that question, but more importantly, it's not whether I think you should or Keith thinks you should, it's whether or not you understand the investment and how that investment vehicle fits into your wealth building philosophy.
And maybe just to jump in to add something a little bit, what Brian's saying about understanding what you're investing, it does, the craze with Bitcoin investing does remind me of real estate 15 to 20 years ago when people were investing in real estate and just thinking, you make money in real estate, it's always going up. And they didn't understand what they're even investing in. And there was fraud, there was, these different, debt securities that were passed off as safe investments that weren't. And I think that is important to remember, that you need to understand what you're investing in. And don't just assume the prices are always going up. I think that's the, and as a, my nature as an accountant is to sort of, some people say I'm pessimistic and a naysayer, say I'm realistic and prudent, but, be sure to know how it is that you're making your money and where the value in your investment lies.
Yeah, and to that point, a lot of people see some people investing and becoming crypto millionaires or crypto billionaires, and they say, why can't I do that? Why can't I put $100 in here and have that $100 turn into $1 million? Again, it really is based on your understanding of the specific asset class and your understanding of what am I putting my money in, and is that an investment that is actually an investment that's going to grow because it has some fundamental asset value to back it. So this entire, strategy of how do you develop that strategy to build your crypto portfolio, it really starts by understanding, is this an asset class that should even be a part of your portfolio to begin with? And do you have the time and energy to understand the differences in the different coins, the different tokens, the different platforms, and all the different exchanges? And to that point, tying back to when we say, how much risk or what's your time horizon, when would you need that money? When it comes to risk, it's extremely important that the individual that's developing this particular crypto strategy understands those 3 R's of risk, your risk appetite, your risk capacity, and your risk tolerance. In terms of that appetite, A risk tolerance questionnaire is definitely a really good starting point. There's tons of them out there. If you just Google search a risk tolerance questionnaire, you're bound to come across some from TIAA-CREP, a Vanguard one, tons of them out there. But specifically, when you take a risk tolerance questionnaire, it's asking you about different scenarios and about different willingness to accept and take upon certain types of risk. That risk capacity ties into your ability to take risks. I was reading a report about a week ago of a gentleman that, he noticed that Bitcoin kept going up, kept going up, kept going up. Really thought, I really want to retire early. I'm going to take my entire family's life savings that we've been saving up for about a decade, decade and a half. He took the entire amount of money, invested it all into Bitcoin. And then as Bitcoin, as a very volatile asset class, lost some significant money, he ended up selling and lost his entire life savings. That's a perfect example of somebody that took on entirely too much risk and didn't have the financial ability to accept that particular risk. But when it comes to that risk tolerance, it's extremely important that any individual that's coming up with that investment philosophy or investment strategy, they define those limits of how much am I willing to lose, how much am I willing to gain, and where are those limits or boundaries with respect to this asset class that even if you think you know a lot about, there's always somebody out there that knows more than you might. The second side of this, again, is that time horizon. Not only time horizon of your age and how long either this investment or this crypto could ultimately turn into something of significant value, but also your time horizon of when do you intend to pull that money out. So generally speaking, from an investment perspective, short term, do I need access to this money in fewer than 5 years? Do I need access to this money within 5 to 10 years? Do I need access to this money 10 plus years? So if an individual is saving for a car and wants to buy this car a year from now, 2 years from now, crypto is probably not the best asset class to put money into and hope that the same amount of money or more money is available to pull out a year later to buy that car. Same thing as it relates to the medium term. If you're looking to save for that down payment on a house or save for kids' college or something like that, there's still a lot of risk associated with that. And of course, there's risk associated with what's it going to be at the time when you pull it out. Now, the long term, 10 plus years when you need the money, certainly the general role here, generally speaking, the longer the time horizon, the longer the investment horizon, the more aggressive an individual can ultimately be with respect to taking on that risk. So for instance, when students ask me at age 19, age 20, if I happen to have $5,000, should I put it into Bitcoin? Again, I would never answer that question, but at 18, 19, 20 years old, if you let it sit there for 30, 40, 50 years, you got a long time horizon that potentially you could turn it into a decent sized nest egg. But if an individual like the gentleman I just gave the example on is, 55, 58, 60 years old, approaching that retirement age, and that time horizon window is shrinking, it's probably not the best asset class to dump a whole lot of money into based on the volatility of that account and the ultimate amount or risk associated with pulling enough or what you think you're going to pull out when that time horizon expires. Keith, any additional thoughts on that?
No, I mean, I think it's wise to remember that Bitcoin or cryptocurrency is just like any other asset, and you have to identify the risk, and you have to truly understand yourself and what you're comfortable with possibly losing.
So that gets us into portfolio allocation as well as trade frequency. So another common question, and this is a common question throughout a whole bunch of different Reddit forums, investment forums, Wall Street forums, you name it, the investment community is always asking, all right, so I think I want to be invested in crypto. I've been building up my portfolio for some time now. What percentage of my portfolio should be in cryptocurrencies? And if it's not a percentage, what dollar value should I have in cryptocurrencies? Well, the truest answer to that is it really depends. There's no right or wrong answer. It ties back to what we just said from a strategy perspective. What are you personally willing to accept risk-wise? What capacity or what risk tolerance do you have? What's your time horizon? The general rule that a lot of investment advisors are following is generally don't invest anywhere more than 5%. Between 1 and 5% is kind of that perfect area. And the reason that they say that is, anything less than 1%, if you have 0.5% in your portfolio, the volatility of some of those cryptocurrencies isn't going to be really a whole lot enough to move the weight of your overall portfolio. But anything greater than 5%, you can start getting into the 10s, the 20s, the 30s. Then these price fluctuations of the coins or tokens or whatever it is that you're invested in can really, really float the value of the account up and down in a significant manner. So from all of the readings, all the literature, the average investment firm is saying, yeah, it's between 1 and 5%. But again, it's not a hard and fast rule, 1 and 5%. It's entirely dependent on the individual. And again, that individual's willingness to accept the risk. But the general rule, once again, don't put in any more into this asset class than you are personally willing and are capable of affording to lose. And then you have the question of, should you trade it, or is it something that you should hold? Now, should you hold? And notice that there's a very appropriate spelling here, HODL. This is based on a Bitcoin forum back, I believe it was 2013, where a lot of people were asking about, should I buy and sell, trade, frequency of trades, or is this an asset class that I should buy and I should hold for the long run? And in that particular forum, there was a misspelling of the hold, and it came out as HODL. And everybody took this on and said, oh, this is perfect. I'm a hodler or a holder. So that's not a typo in this particular presentation. It's purposely done that way. So the general thing here is, can you day trade crypto? Absolutely you can. But should you? Probably not. There are definitely some crypto millionaires out there that have or they think they've cracked the code and are capable of taking advantage of some of these market opportunities. But for your average person, buying and selling is probably not the smartest of ideas. And it's not that the individual might not know, when's the perfect opportunity to buy and how to time the market, but it's going to get into some of the major issues, some of the major issues associated with taxes and the consequence of doing these massive exchanges over and over and over, which we'll get into later in this strategy talk. The other thing to note is that diversification theory still applies to all things cryptocurrency. Investing in just Bitcoin or just Ethereum or just one particular coin is probably not the best of strategies, just again, based on the volatility. And off to the right here, you can see a chart that talks about the top 10 cryptocurrencies as of November of 2021. So at the very top, not surprisingly, we have Bitcoin, and again, not surprising, Ethereum based on total market cap. But if you look down further in the list, two of them should really stand out, and that's Shiba Inu and Dogecoin. These are both meme coins, but they fall in the top 10 overall in terms of market capitalization. We're going to get into this a little bit later, but the mere fact that two meme coins fall in the top 10 list of all cryptos that are traded really tells you about how speculative some of these investments truly can be. So let's say that an individual is interested in developing crypto as a part of their overall investment portfolio. They've decided they want to invest some dollar value or some portion of the overall portfolio. They know they're interested, but they're not sure exactly where to do it. So the question becomes, what should you look for when you're evaluating different types of crypto exchanges? And there are at least 6 major points from a strategy perspective that every individual should examine before they commit to one or more platforms. And the very first thing, first and foremost, security. How secure is the platform that you're going to trade on? How secure is the wallet that comes with the platform? And does the platform have the ability to accept external wallets, either hot wallets or cold wallets? Meaning, is the wallet going to be in the exchange itself? And if the exchange happens to get hacked, that wallet is potentially hacked? Or is it going to be something that you carry around as a thumb drive, has a long passcode, and God forbid you ever forget that passcode and or lose the wallet, then unfortunately you've lost all of your cryptocurrency and coins. But the security of the website, the security of the platform, the security of the exchange absolutely takes precedence here. The second thing is the exchange fees associated with this. Trading crypto can be very costly depending on the frequency of the trade that you do, also based on the dollar value that you exchange. Now, the types of exchanges that we're going to show you next Some of them vary with less than 1%. Some of them go upwards of 4, 5, 6%. Some of them are free. But the fees, you have to evaluate. If you're simply buying and then you're going to hold, that's one thing. But if you're a crypto exchange person that wants to trade in and out, in and out, in and out, in and out, those fees are going to add up very, very, very quickly. There was just a recent article, a group of individuals got together and tried to purchase a very rare portion of the Constitution, or not a portion, but a copy of the Constitution. And they raised a whole bunch of money, but the exchange fees were in the millions for this. Fortunately, they were refunded these exchange fees, but the fees add up very quickly. The third consideration is, of course, the ease of use. Some platforms are designed for your general users that have no background in any sort of investing. Some of these exchanges are based around very advanced users and have advanced charting capabilities, candlestick charts, depth charts. So the exchange that you ultimately choose is part of, again, your investment philosophy, how frequently you want to trade and how in-depth of a trader you ultimately want to be. Are you the person that's going to, you see a price drop and you buy? Or are you the person that's going to be looking at and choosing, okay, when this particular cryptocurrency gets to this price point, that's going to be my buy? Are you mapping out and charting all of these candlestick patterns and all these other trading patterns? And some of these exchanges are more easy to use on an actual computer. Some of them are very mobile friendly. So again, it depends on the type of user and the type of functionality that the user wants to get out of it. Also, and this ties into a later portion of this talk here today, the ease of use also relates to the back end of things. So at the end of the year, you want to pull reports and you want to pull a whole listing of all of the different transactions that you've made throughout the year. Some exchanges allow you to go in and say, I want to pull everything from January 1st, 2021, all the way up and through December 31st, 2021. I want to pull every transaction, every fee, everything, export that to an Excel file or export it to a CSV file. That way I can pass it off to my accountant or somebody else that's doing my tax return. Some of these exchanges don't have that export functionality, or if they have the functionality, they don't have the ability to go in and independently search the specific dates or asset classes that you ultimately want to export. And of course, one of the other considerations is the customer support. If you have an issue, who do you contact? How quickly do they get back to you? What if you want to learn more about a particular aspect of the platform? Is this platform housed within the United States, or is it housed outside of the United States? If you have an issue with your wallet, who do you get a hold of? So customer support is another consideration. Supported coins. Some exchanges carry very few coins, maybe less than 25 coins. Some exchanges might carry 50 plus, other exchanges 120 plus, some exchanges 400 some plus. So once again, depending on what type of asset class you want, do you want all of the coins, your stable coins, your Bitcoins, your altcoins, or do you just want the limited selection of coins to choose from? Well, depending again on the type of trader that you're going to be or how much active trading you want to engage in, that really tells you which platform you should ultimately select here. And last but not least, with respect to what type of considerations you should have, is the payment methods. Is this an exchange that you can link your bank account to and automatically move money from your bank account into your crypto wallet and then buy and sell coins from there? Or is this something that you have to have different types of payment methods? And same thing as it relates to pulling your money out of the exchange. Does it have a limitation with respect to, can I only pull out, hypothetically, let's say you're a crypto millionaire, can I pull out $1 million in one day? Or is this something that I'm limited to, I can only move, $15,000 a day, and I can only move it into a PayPal wallet, and then from PayPal I have to move it into my bank account. So we're not going to get into all of the different exchanges, but we felt it's extremely important to note that you, as a person that's developing this crypto strategy, you have to evaluate which exchange is best for your types of trading needs. With respect
to tag on a little bit and to foreshadow some, that when Brian was talking about the ability to export your transactions at the end of the year or any time during the year is becoming extremely important, because the IRS is definitely increasing their scrutiny and auditing for unreported crypto transactions. So definitely helpful in trying to keep yourself out of hot water with Uncle Sam.
Yeah, and same thing, there's a big difference between an exchange that allows you to export into a PDF versus an exchange that allows you to export into, again, either a CSV or an Excel file, simply for the ability to know, be able to sort and figure out exactly what the cost basis was, what time you bought it, what time you sold it, so on and so forth. So what we have here is a list of some of the top crypto exchanges. CoinMarketCap, and if you go on their website, you'll get a whole bunch of information related to a whole bunch of different cryptocurrencies, crypto tokens, as well as crypto exchanges. And CoinMarketCap ranks and scores exchanges based on a variety of different aspects. And these aspects include based on overall traffic to their particular exchange, the liquidity. So, if I do make $1 million on this, does the exchange actually have the liquidity for me to pull this out, or is it just going to be defunct? Trading volume, how much active trading is actually happening on that particular platform, and then of course confidence in the actual legitimacy of the trades that are being reported through the exchanges themselves. At the very top of the list is Binance. Now, normally I would have a top 10 list, but we thought it was extremely important to list the top 11. And the reason being is, if you notice, number 11 is Binance.us. So Binance, without a doubt, based on volume, based on weekly visits, dominates the crypto exchange market. It is the predominant exchange that the vast majority of crypto traders use. The unfortunate side is that it's more or less banned in the United States. So consequently, they did a spinoff in 2019, I believe, with Binance.us. So Binance.us made the top 11 listing here. But the consequence of that, of course, is that it doesn't have the full listing of altcoins that would be found on the Binance exchange. And this, again, is a fiat-supported platform that is US dollar more or less only, versus your Binance has a variety of different fiat-supported background type of exchanges. And with that, do note that there's one that a lot of younger users are using that is not shown on this list here. We don't have Robinhood listed here. We don't have PayPal listed here. We don't have some of the other default crypto exchanges that are not actually exchanges, but do allow users to trade crypto. So if you know anything about Robinhood and their ability to trade Bitcoin or Ethereum or Litecoin or Dogecoin, anytime a user buys something through Robinhood, tying back to fee structure, they might not charge you a commission, but that doesn't necessarily mean that you're getting the best bang for your buck. And what we mean by that is that you might buy something that's commission free. So Coinbase, for example, number 2 on the list here, you might save a 3 or a 4% fee associated with making that trade, but what you're losing out on is the fact that you don't technically own the coin if you bought it through Robinhood. Robinhood technically owns the coin, but you own the stake within Robinhood. So depending, again, on your individual strategy, if you're going to simply purchase, we'll call it stock in the coin, and you never intend to purchase anything physically or tangibly with the coin, yes, you can certainly trade on Robinhood. But if you want the ability, assuming the Tesla goes back and allows you to buy a Tesla with Bitcoin, you would not be able to physically trade your Bitcoin to Tesla through an exchange such as PayPal and or Robinhood, but you would through Coin Exchange or Coinbase or Binance.us. With respect to these, in terms of the overall crypto exchange platforms, Forbes Advisors combined a whole bunch of information, and they came up with the leading exchanges based on offerings, all sorts of these things, to determine their top 2 picks for November of 2021. And they came up with Binance.us, not surprisingly, again, based on overall market value, how Binance as the main exchange is without a doubt the best overall crypto exchange. But then Coinbase also came up, and this is best for overall beginners. Now, it is important to note that Coinbase actually has 2 different versions. You have Coinbase, which is designed for the general beginner, but then you have Coinbase Pro, which is a separate, more complex platform. But that complex platform also comes with access to lower pricing structures. So if you're the person that's going to be trading a lot and very frequently, and you like the Coinbase side of things, you might be interested in the Coinbase Pro in order to get the lower fee structure and also have access to different types of mapping technologies. Now with Coinbase, though, one of the reasons that they say this is the best crypto exchange for beginners, Coinbase also offers a learn and earn opportunity where new users can go in, click on something, learn about that particular cryptocurrency, that crypto token, and then ultimately earn airdropped or free tokens or free crypto simply by taking little tiny quizzes associated with them. So learn and earn is one type of thing, but again, this all goes back to the individual strategy. And the last thing I'll mention on this is, if you just notice in the screen, your Binance.us has the maker taker fees of 0.1%. That's pretty much it. Whereas Coinbase has 1.99 to 1.99, but Coinbase Pro, again, has differences. So different coin options, different currencies available, different security rankings, different fee structures. With that, that gets us into some major considerations when one goes to trade crypto. So I'll turn this over to Keith to kick us off here.
All right, thanks, Brian. And so Brian mentioned before some of the meme coins, or I like to call them the joke coins because they're kind of created as a joke. The Dogecoin and the what's the other one, Brian? Shiba
Inu.
You can tell I'm really into them. But when you're talking about trading, and we talked before about knowing what you're investing in, what are you buying when you're buying Dogecoin? And to me, the answer is, I don't know. It's speculative. Is it a currency? Well, currency has to serve as a medium of exchange, a store of value, or a unit of account. And Dogecoin does not serve any of those purposes. So, and the other thing, we'll go to economics, price is often based on supply and demand. So Bitcoin has a finite number of coins. That causes the price, to go upward because you have demand for a limited supply of coins. For these meme coins, they're, to my knowledge, and Brian can correct me, I do not believe there is a limit on the number of coins that can exist for these. And so therefore you have a extremely huge number of coins, which drives down the value per coin. But again, it comes back to, what are you investing in? Where is the value in this, cryptocurrency, and talking about the meme coins? Are they something that can function in the market and serve a real purpose in the future, or is it purely a speculative play where you're essentially gambling?
And to that point, Bitcoin, don't quote me on this number, but I want to say, 21 million Bitcoin is out there total that can be mined. But Bitcoin is also, it has halving events as it relates to how much can ultimately be mined. And every so often that number gets cut in half, which again reduces the overall supply and availability. Dogecoin has an unlimited supply. I believe there's something like 4 quadrillion Shiba Inu coins. So consequently, these are essentially penny stocks, if you would, where can you make a whole lot of money on it? Yeah, absolutely you can. Can you lose a whole lot of money? Absolutely you can. So to Keith's point, it's extremely important to just note, first off, what am I getting out of this? But also I'm going to go back to that emphasis on, why are you wanting to invest in Dogecoin or Shiba Inu coin to begin with? Is it simply that you heard that people are putting in $100 and next thing you know, they're crypto millionaires? Or do you understand the platform and the different blockchain that supports these particular cryptocurrencies? If you truly believe in them, and I believe Elon Musk, the Doge father, as he's quoted, he's been noted to really move a whole lot of crypto exchanges just by tweeting them. But I personally would not recommend jumping into stuff that you do not personally understand how it works.
And so the interesting thing with crypto, and as a tax practitioner, I started hearing, fielding questions from clients probably 6, 7, 8 years ago about what to do about crypto. And when I looked into it, 8 years ago, there really wasn't anything, as far as, guidance from the IRS on crypto. Well, government oversight of crypto kind of has followed the same path. It's evolving. There is no, structured, I would say, regulatory environment for cryptocurrency in the United States. It is, definitely the regulatory emphasis is increasing for the government. But the issue sort of lies in a fractured viewpoint of what cryptocurrency is. So the SEC refers to crypto as a security. Commodities Future Trading Commission views crypto as a commodity. Treasury Department says it's a currency. IRS treats it as, taxes it as property, which would match up with how the Securities and Exchange Commission views it. So again, when you're getting, working with cryptocurrencies, you have to, be aware of the government regulatory environment. This could affect the value of your cryptocurrency. It could affect your taxes, which I'll talk about in a second. The other thing, it's been kind of a wild, wild west for, from a tax perspective, because again, there wasn't clear guidance on what transactions need to be reported. You get coins via an airdrop. Is that a taxable transaction? Well, it could depend. You mine, Bitcoin. Is that taxable? Someone gifts you Bitcoin. Is that taxable? You get paid in Bitcoin. There's a couple of NFL players, 2 mayors of large cities, mayors of Miami and New York, saying they're going to take their salaries in cryptocurrency. How's that taxed? The answer there is taxed as if they receive cash, as the value of the Bitcoin they receive, or whatever cryptocurrency is being used. So you have to be, aware of what the regulatory environment is. And right now it's uncertain, but I can tell you that government scrutiny is increasing. In August of this year, the CFTC, the Commodities Future Trading Commission, and FinCEN, that's the Financial Crimes Enforcement Network, slapped a very large fine on a cryptocurrency derivatives exchange called BitMEX. $100 million fine because they accused it or classified it, BitMEX, as operating as an unregulated commodities exchange. And so these are risks that you have to take into account about how that could potentially impact the value of your investment. So it's sort of something you have to keep your eye on, because the way cryptocurrency is being regulated is being, or that framework is being formed right now. Interestingly, on the tax side of it, the Infrastructure Investment and Jobs Act that was passed earlier this month is now going to require mandatory tax reporting by crypto exchanges and brokers beginning in January 2023. So previously, my clients that have been reluctant to report their crypto transactions on their tax return are now not going to have a choice. It's going to be reported by the exchanges, and if you don't put it on your tax return, the IRS will match that up, and they will send you a nice little love letter telling you that you might owe them a few dollars. So you'd like to avoid that.
And Keith, with respect to that regulatory environment, I think it's important to note what's happened in China recently as well. So Bitcoin and all cryptocurrency transactions, all mining efforts, everything else of the sort has become entirely illegal in China. So if that's any insight as it relates to what type of approach the United States is going to take, how we're going to implement that, I think it's important to note that other countries are at least tackling this issue very proactively. So be cognizant that hypothetically, anything that you put into this stuff technically could become illegal and technically could become absolutely worthless overnight. So again, tying back to don't put in any more than you're actually willing to lose here. There was another article that just came out, I think it was a Barron's report, talking about how the United States is really pushing forth in trying to regulate some of the stable coins, since the stable coin market is operating outside of the regulatory framework that exists for typical fiat currencies. So to Keith's point, I think the regulatory environment for this stuff is certainly evolving, and it's going to continue to do so into the future.
To hone in on the tax treatment of cryptocurrency, the first guidance that the IRS put out regarding cryptocurrency was in 2014 with one of their notices. And the IRS said, we are going to treat crypto as a capital asset. So you might say, well, what's that? Well, that's like a share of stock. So if you sell a share of stock, it must be reported on your tax return. If you have a gain, if you bought low and sold high, you have a gain, you have to pay tax on that. They're considering cryptocurrency the same type of asset. So that means if you bought crypto and then had engaged in a taxable transaction with that crypto later on, you need to report that sale or exchange on your tax return. So some things to note. There is a positive aspect to the tax treatment afforded cryptocurrency by the IRS. And that is, since it is a capital asset, if you hold cryptocurrency more than a year, you get a preferential tax rate of either 15 or 20%. And actually, I should say 0% if you're in a low enough tax bracket, because it gets the capital gains tax rate. If you hold the crypto assets less than a year, then you are just taxed at your ordinary marginal tax rate. So whatever tax bracket you're in, that's the tax rate that will be applied to gains on your crypto assets. Losses on crypto transactions can be deducted against other gains on your investments. And you can deduct if you've wiped out all your gains on all your other investments and you still have a loss in your cryptocurrency, you can take up to an additional $3,000 loss and offset that against your other, ordinary income such as wages. So you do get to take advantage of losses on your taxes. Not that you want to lose money, but I'll be honest, most of the clients that I have that are engaging in crypto transactions and are giving me their information to report on a tax return, most of them have had losses. A few have had gains, but more of them have had losses than gains. But I suspect that the number of people engaging in cryptocurrency transactions, or at least reporting them, will be increasing in the next couple of years.
Yeah, and to that point, I think it's important to note that some of the average people that I talk to with respect to what they're doing on some of these crypto exchanges, the key point is that the sale or exchange of crypto, it's not like, all right, I buy Bitcoin, I purchase something else, I purchase something else, I purchase something else, I put it into US dollars, I pull those US dollars out. It's not like you had one taxable transaction there. Where a lot of people are running into problems with this is, let's say hypothetically I buy $10,000 worth of Ethereum, and then I trade that over into Polkadot, and then I trade that into Dia, and I trade that into Bitcoin, and then I trade that into something else, and then into something else. Every single one of those transactions resulted in some sort of taxable transaction. And that again goes back to your ability to track exactly what your cost basis was, the time period within which you bought it, how much you actually bought, what you sold it for, what's the time period that you held it. So all of these concepts are all interrelated. But the biggest challenge is people that are trading in and out of different types of currencies and not recognizing that every single one of those transactions is actually a taxable event.
And that is a confusing situation with these exchanges. Most of my clients that are engaging in crypto do not realize that exchanging, Bitcoin for Litecoin or Ethereum is a taxable event. They just think, hey, I just trade one coin for another, but the IRS considers that a sale basically, and it has to be reported. There has been efforts to try to avoid taxation on these exchanges, but the IRS has specifically rejected these positions that taxpayers have taken, that in exchange of cryptocurrency, one cryptocurrency for another, is eligible for what's called a like-kind exchange, which taxpayers can use when they can use to defer a gain on, say, the sale of a building when they buy another like or similar building. The IRS has denied that treatment for cryptocurrency. But furthermore, with the disclosing of cryptocurrency transactions, in 2019, and this is when I started having to ask clients about whether they're engaging in cryptocurrency transactions, there was a question on a tax return that asked clients or taxpayers, have you engaged in the sale, exchange, purchase, whatever, of cryptocurrency during the year? I had a number of clients that were very reluctant to answer that question. And I just told them at the time that this is a sign that mandatory reporting of cryptocurrency transactions is coming and is now a reality with the passage of the infrastructure bill earlier this month. So failing to answer this question properly could potentially expose taxpayers to penalties for not reporting transactions or withholding information from the IRS. Again, unpleasant situation you would like to avoid. As I mentioned on the previous slide, IRS treats cryptocurrency as property, and the sale or exchange of that property needs to be reported on what's called Schedule D of Form 1040. Just as an aside, when you are dealing with trying to do your own tax return and these sales, unless you are savvy with tax law, I don't recommend trying to do this yourself. It can get kind of confusing on how to report these transactions fairly quickly.
Yeah, and I just want to tag back to the specific language and verbiage that is pasted into the 1040 tax return here. It's not just, have you bought and sold any crypto? It's, have you bought, have you received, have you exchanged, have you held, have you owned? There's a whole slew, a whole list of language that they have there. So if somebody's gifted you anything, if you've done one of those learn and earn events, if you've done anything and personally have owned any sort of cryptocurrency throughout that tax year, you're expected to check, yes, I have done this on your tax returns moving forward.
Just to review the transactions that are reportable, obviously, if you exchange your cryptocurrency for cash, most people understand, yes, that's a taxable event, I need to report it. As previously mentioned, the exchanging of cryptocurrency for non-cash assets or other cryptocurrency is also considered a sale of property. Now, here's the third item on this list is what is surprising to my clients when I tell them this. If you use your crypto, as Brian mentioned before, Tesla for a while was, or for a period of time, was accepting Bitcoin as a form of payment for a vehicle. If you did that, you now have a taxable transaction that you must report on your tax return. Why? Well, the IRS is saying you are exchanging this property, you're selling your cryptocurrency in exchange. You may not be getting cash, but you are getting an asset. And so the transaction price or the sale price is the value of that Tesla vehicle that you might be buying with cryptocurrency. It's true if you go buy a pizza with cryptocurrency. That is a transaction that you are supposed to be reporting on your tax return. Now, I don't know how how well the IRS can police that is another story, and whether those transactions all get reported by the exchanges is left to be seen, because there's also some questions with the passing of the infrastructure bill and the mandatory reporting by brokerages and exchanges. The question has been raised, who is a broker or who is an exchange? So that is another issue. And then again, another example is receiving cryptocurrency via airdrop. To calculate the gain or loss, it's fairly simple. You take the fair market value on the day of the transaction. So if you sold crypto, coin, let's say 1 Bitcoin, what's the current price, Brian? 55,000 or something like that?
Roughly.
Give or take $100,000. So let's say you sell a Bitcoin for $55,000. Well, that's pretty clear. The fair market value of the coin or that trade is $55,000. Go back to the Tesla example. If you buy a Tesla that costs, I don't know, $70,000, well, you have to look at how many coins did you sell, exchange for that Tesla. Then you go back and let's say you exchange 1.3 Bitcoin for Tesla. Well, how much did those 1.3 Bitcoins cost you? Then you have to calculate your gain on the purchase of that Tesla. So that could give you some pause when in using cryptocurrency for a large purchase.
Yeah, even the small purchases, I think really give a lot of people pause here, because once again, the frequency of those purchases. Hypothetically, a person goes and purchases ice cream, pizza, coffee, all sorts of stuff. So depending on who's accepting them, it doesn't have to be Bitcoin. It can be a variety of different cryptocurrencies. But every one of those transactions, if you have to report that on your tax form, that really
It's a
increases
headache.
the overall complexity of the tax return, which means in addition to paying the taxes, you're also going to have quite a hefty bill from your tax accountant in order to ensure that the correct stuff is all being reported in the correct way, in the correct order, so on and so forth. And then this ties back to the exchanges. It's one thing if you export this list and you pre-sort the list and you provide that sorted list to your tax accountant and you can see all these basis numbers. But if you don't have that, or if it's not an easily exportable function and you have 20 or 2,000 or 5,000 different transactions to sort through, a lot of people are going to be surprised if all of a sudden the tax return that they're accustomed to paying $500 to get done is now costing them $5,000 to complete. So again, from a strategy perspective, you really have to pay attention to what are you doing, why are you doing, do you understand what you're doing, and what are the implications of engaging in these particular types of activities. So as Keith was just mentioning here, he talked very briefly about some of the information that's ultimately required to be reported on this. So as he mentioned, that date of the purchase, the cost that was actually sold or exchanged, the date or sale of that exchange, as well as the cash value. I'll let you go ahead and take this over, Keith.
Yeah, and so it ties into what you were just saying, Brian, with these small transactions. To me, as a practitioner, I just think this is going to be a headache and a nightmare. Because I just can't see how all the, people are, if Bitcoin or Ethereum or Litecoin or some of these other cryptos become accepted as currency, I think this is a problem. I just can't see how the IRS can enforce it. I see a logistical issue in trying to report all these transactions. So I'm just really kind of waiting and seeing what's going to happen with the enforcement of the IRS's position on how it's taxing cryptocurrency. But you can see on the slide here what you need to the items that are going to be asked to be reported on the tax return. And again, in 2023, January 2023 is when brokerages and exchanges must start tracking and reporting cryptocurrency transactions. That will be easier. But prior to 2023, you better be sure if you're picking an exchange, it would make your life and your accountant's life, if you use an accountant, a lot easier if you use an exchange that allows for the export information. And as Brian said, if it can be in Excel or a format that is sortable, that's even better. But even a PDF document would be fine as well. But something that shows those transactions. It seems like a mundane thing, but it can create a lot of stress in your life when you are worried about tax consequences of underreporting, not reporting taxable income.
So that takes us to our personal take on crypto. My personal take on this, trading crypto is kind of like the equivalent of going to a casino. Now, if you're going to the casino and you got $5,000 when you walk in the door, you better be prepared to walk out with $0. You might think you're really good at blackjack, maybe roulette's your game, maybe you're going to go in, bet it all on black. You could totally do that. You could walk into a casino, put $5,000 on the roulette table, say black, and walk out 5 minutes later, doubling your money. You could do the same thing in crypto. But the exact opposite is also true. You can walk in, you can put $5,000 down, and 5 minutes later, it's gone. So my general personal take on all things crypto as it relates to strategy, I think I personally would enjoy it being part of people's portfolio, but I kind of go with what most of the investment advisors are suggesting. I don't think that it should really exceed more than 5% of someone's portfolio. Now, some people argue, 5% of net worth, But once again, I'm going to go back to your investment philosophy, your individual investment goals, but also where you are in your individual investment life cycle. If you're a 20-year-old person and you don't have a whole lot going on, you don't have a family, you don't have kids, you don't have a house, you don't have a car, and you have some extra spare cash and want to put in something for a potential long-term gain, you have a large time horizon if you're willing to let it sit, if you're going to hold the thing. But if you're going to bet the farm on it, I personally just would not recommend that. But that's my personal take on strategies associated with this. I like the thought. I like the concept behind it. I love the concept behind blockchain technology, but it's a speculative, very risky investment. So before you take the dive, you have to understand what it is that you're doing and have to be willing to accept the risk of doing it.
And so for me, I'm a little older than Brian, and probably maybe a little more risk averse. And I am not someone that will invest in crypto. I don't think. I have been, I have one client in particular that asks every time I talk to him, he's like, "You on the crypto train yet?" And I'm like, "Nope." But for me, it comes down to what was called, a concept called opportunity cost of capital. I have, a finite amount of money that I have available to invest. I'm within, 15 to 17 years of retiring probably. So for me, I'm not willing to take on that risk because, as Brian said before, you need to understand what you're investing in. And I still have a hard time understanding how, cryptocurrency fits into our finance system. I understand how it works. I understand basically how the technology works. But is it going to be accepted as a currency? Is it something that you can use as a reliable store of value? To me, those questions are unanswered, and so that makes me nervous. I would rather put my money, talk about the opportunity cost of capital. I'd rather put my money into different investment vehicles or into my practice. I have expanded my practice. I have, that comes at a cost. So I'm taking money that I could be investing in, say, cryptocurrency, and I'm putting it into my practice. And I think I'm more comfortable with that because I can see a more immediate return on my investment in terms of greater revenue for my practice. So for me, I will learn about crypto. I will understand the tax implications of crypto. I will not advise clients on whether they should buy crypto. But I doubt that I will, unless I'm just curious and I take some money that I, don't care if I lose and throw it in there just to see what happens. I doubt that I'll be a major cryptocurrency investor.